Welcome to the Investor Fuel Real Estate Investing Show, where I interview the nation's top real estate entrepreneurs, industry leaders, and other amazing entrepreneurs to help educate and inspire you to take your business and your life to the next level. My goal is to add tremendous value to you during every single episode of this show. If you get value, I'd love it if you subscribe on your favorite podcast player, subscribe on YouTube, and my very favorite, please share this with your community so we can impact even more entrepreneurs. Let's start today's show. Hey everybody, welcome back to the show. Today I'm here with Michael Plaks. He is a tax strategist and a CPA, and we're going to be talking about kind of how to navigate these waters. I know there's a lot of confusion with the new president, the new administration, what's going on. I think generally entrepreneurs are hopeful that there's going to be a better taxing environment, a better business environment for us, but there's a lot of confusion, and Michael is going to try to help us clarify a little bit of that today. So Michael, glad to have you here.
Yes, okay. Always pleasure to be on your podcast, Mike. You know, we've known each other for a while, and that's cool now. Interesting times indeed, because we are in 2025. We have new administration, and since you brought that up, yeah, let's start with that, right?
Yeah.
I would look slightly like roll back 8 years, because like the first time Trump came to the office, and there was a lot of campaigning based on amazing tax reduction, all of these ideas that he first time campaigned on. People who have long memories may remember 15% business tax across the board, no matter what entity, and this and that. And well, then there was the first reform from 2018 during his first term, which did not come out exactly as promised, but it was a great reform for most business people, particularly real estate investors. And for those who don't know me, I work exclusively with real estate investors. That's all my clients. All my clients are in real estate, so that's my specialty.
Yeah.
And for real estate investors, that was great reform back in 2018. Now, the way it was structured is it had a sunset. Okay, so like about now we're entering a period where a lot of things that came with that reform are supposed to disappear. Okay, so, and some of them are phasing out. Some of them are scheduled to disappear in a year or two, and some of them are gradually phasing out. Like everybody knows and loves bonus depreciation, and it used to be 100% and 80 and 60. Now we are in 2025, it's only 40%, and like then it's going to be 20 and disappear. Okay, so there is a lot of talk. So what is going to happen now? So the new administration comes. Are they going to extend the original reform, or is it going to fall off the cliff when the initially scheduled time comes? What happens with bonus depreciation? We get a lot of questions about that. I'm totally amazed when I listen to podcasts, not yours, Mike, but some podcasts or like articles pop up, like social media crap, all of that, and people saying, this is what's going to happen to me. How do you know? Like, how do you know that that's going to happen? Because what is happening is this. First, it needs to go through Congress. Okay, yes, fine. Okay, technically, Republicans have White House and both chambers of Congress right now. Yes, it does not mean that they get a free, ride and can do anything they want. Besides, even within Republican Party, there is no consensus on a lot of things. Sometimes there is voting across the aisle, between the parties. You don't know. Besides, we still have laws, even though the government can print money, and they do, right? But we still have laws that the budget needs to be balanced, right? So if you extend these tax breaks, you need to take some other tax breaks away, or generate money in some other way. So it's a complete unknown right now, right?
Or
so
God
what is
forbid,
happening?
cut expenses, which our buddy Elon's trying to do. So we'll see.
Yes. Well, but we are in such funny, uncertain times, right? So we don't know. They have to define the plan first. Then they need to push it through Congress. Then when it comes, let's take bonus depreciation, for example. Let's say they're going to restore bonus depreciation. Okay, first, maybe, right? They want to. You want to. I want to, right? We all want to do it. But they need to create a bill that balances that. They need to push it through Congress, right? And then when it comes, the question is, when do they restore it? As of the day when it becomes the law? or is it retroactive to the beginning of 25? What about 24? 24 had 60%, right? Is it going to retroactively restore it for 24? What about 23 when it was at 80%? Now, if they are going to apply it retroactively, does it mean we are amending old returns like redoing them? Or are we applying it all as a catch-up in 25? Nobody knows. So you cannot make predictions right now until those things happen. So to me, all of that, oh, I will show you strategies how to plan for the new law. Which new law? We don't have it yet.
We don't know.
Now, maybe by the time we are recording this in March of 25, by the time like our recording is released, maybe some certainty will appear, but that's work in progress. It's a moving target, so I really don't know. One thing, though, which is interesting that happens, and we also get a lot of questions about it, is, okay, the IRS, all of those like firings of federal employees and how that, also interesting dynamics, right, for people who watch, because a couple years ago, they hired this brand new army of new IRS agents, and everybody was freaking out, like, okay, now we're going to have all of these armed people, with guns on their, on them, like knocking on our doors and getting all of that. I was okay. Of course, none of that happens, but now we are in opposite, right? The government always swings, right? One extreme to another extreme. So now we are, instead of hiring more people, firing everybody, right? So IRS, like I network with all of tax professionals and former IRS people and current IRS people, right? So yes, there are already real layoffs, right? So they are planning to cut right now the IRS existing employee force in half. Okay, what does it mean? Okay, you can also, we don't know, you can speculate. Who are they going to fire? People who are trying to answer the phone, they're the easiest to fire, right? Are they going to actually fire auditors? Okay, what is going to happen to all of these cases right now? Now, as we are speaking today, which is again March 25 when we are having this conversation, the IRS right now is frozen, on the inside due to that uncertainty. Nobody knows there. Are we auditing? Are we not auditing? Are we getting fired? Are we like, what is going on? People there are paralyzed with the same like fear and uncertainty that everybody else, right? So they don't know. Question is, does it mean we are not going to have audits now because they are firing all of these people? Don't ask me. I don't know. People at the IRS don't know, and people at the government don't know today. We have to see how it will pan out, but all the current cases, for instance, in my firm that I have dealing with the IRS, and sometimes people wonder, okay, what is all these things like? Why am I wearing a blue gi like from martial arts? We skipped that introduction part, but I am known as black belt in real estate taxation. So when I speak live, like, I wear that, like, here is my actual black belt that I wear, and I put on my sparring gloves and knock off Uncle Sam, who is right now social distancing behind me. Yeah, somebody needs to knock him out. But right now is okay. So I do have cases right now with the IRS, but we right now cannot move on those cases. We cannot reach IRS people. All of them are like, it's completely chaotic on their side right now.
Sure, yeah.
So we don't know. Again, so does it mean we can become reckless today, and like stop paying attention because, okay, the guard dog is not there anymore, so the door is open. We just like take everything and, and loot the treasury because nobody watches anymore. I don't know, right?
Yeah, time will tell. Yeah, it's interesting because obviously, it's been pretty widely speculated that Trump would like to end the IRS, which I would love that too. So yeah, I mean, there's nobody that was going to know how that will work out. I mean, if there was more of a flat tax,
I don't believe that it's. Sorry, Mike.
Yeah. No, just saying there's so much that's not known, but I think, and obviously the thing that I'm about to say benefits you as a tax strategist, but as a small business, it is, boy, it's a burden to like just to track all of our, just the administrative burden on a small business is ridiculous.
Sure, absolutely.
I think if there was ever anybody that knew that, it's Trump, like in terms of all the presidents, because most of them have never run a business in their life. So he knows that more than any other president. So if there was ever a chance to make some massive strides to simplify things for entrepreneurs, I have a feeling it's during
Yes.
this administration.
Again, it's not just Trump and not just Musk.
Sure.
Yes,
Oh, right.
they're still Congress, right? And remember that after this administration, there will be next administration,
Right.
and also no idea what kind. So, and things tend to swing. Like, you've been in business for a long time, I've been in business for a long time. We have seen those things. You know, they go left to right. You know, and yes, pun intended when I saying left to right and right to left. It's like political statement too. Yes, things change. We don't know. It's just, but as much as I'm voting for, like, if anybody counts, okay, here is my vote. I raise my hands. I can raise both hands. I do vote for abolishment of the IRS. I just don't think it will happen. You know, and things. But isn't my job security? No, I have plenty of work without it. I would be happier if I don't have to deal with him. I would just deal with you guys, you know, and help you develop it. But I don't think that IRS is going anywhere. What might happen is that for a while, due to this upheaval, you know, and nobody knows what's going on, there may be some period of like diminished activity, because like a year ago, not a year ago, like when I say a year ago, we are in 2025, I mean in 2024, right? Suddenly the IRS woke up after COVID, and the whole stack of IRS letters started coming. Like, our clients started receiving them, we started receiving them suddenly, because like during COVID time, there were no audits, no like serious concern about IRS. Then last year, 2024, there was a lot of that. Right now, 2025, everybody, including the IRS, is on hold, like saying, wait a minute, let's see what happens. You know? So, but to me, the strategy has always been like, my business next year will celebrate 30 years, like in my type of business. So during this time, I have always been of the same philosophy, and you and I talked about it before. Like, we are on the same page, Mike, right? Because, and like some people from Investor Fuel, you know, your, you know, community are my clients. So like, we're all on the same page in that respect, because I don't tell my clients how to treat their business. That's their decision, you know, and I can be as aggressive or as conservative as my client wants to be. My client wants to be aggressive, great. We will walk that line together. You know, I will guide you, I will show you where the line is, and I'm willing to walk up to the line, obviously not crossing it. The problem is that the line is blurry. You know, it's not a bright line where it says yes or no. Sometimes it's and I have a lot of conversations with our clients which saying is like, do I qualify? I'm saying is, okay, frankly, this is controversial. And then we're saying is, but isn't it written in IRS publications? No, first, IRS publications are useless, because this is IRS interpretation of the law. It's slanted towards the IRS interpretation. It's not the law. It's how the IRS wants you to read the law, right? So it's not the actual law. Oh, who decides the actual law? The courts. Oh, let's see what the courts say. And then you're looking, okay, this judge in this case said this, and that other judge in that other case said that, and you put the two together, they're contradictory. So what do you do? You know, when one case says one thing, the other one says another thing. You exercise your judgment, right? Saying is, you want to be aggressive, let's push it this way. You know, you don't want to fine, you know, it's your decision. We're going like, you know, push it in the other direction. But there is a lot of room, always have been, like, always there was like wide gray area and you know, I joke when I do presentations about those 50 shades of gray. Yeah, there was like 150 when it comes to the IRS. You choose your shade. You know, you won't like be almost white, almost black. Yeah, there are all kinds of shades, and it's important to understand, because people ask me all the time, so is that okay by the IRS? yes, there are some situations where we can answer that question, but a lot more situations where I can say, well, depends how we slant it. I like to tell people that a lot of IRS representation work when we deal with them is the art of storytelling. How you frame things. That's important.
Yeah.
Because depending on how you do that, the interpretation can be in your favor or against you.
Right. Well, let's dive into some strategies, because I know there's some information out there that people think is either black or white, and it's not necessarily. But let's talk about some kind of common strategies for folks that might be listening to this around,
Sure.
some things that are to try to provide some clarity here.
Okay.
So let's talk about, first off, there's a lot of belief on, like, a lot of people are trying to get a lot of, like, using cost segregation, accelerated depreciation. There's obviously the bonus depreciation, all those things that in theory help, most of us save taxes, but it depends on a lot of things, right? What are some of the things that those things are better strategies for than other people? Like, give some examples of that.
Yes, Mike. Okay. Thanks. Perfect question. Okay. I will address that in a second. I just want to add one thing as a background for all conversations about strategies. We used to have those cocktail parties for investors, in our meetings, where exchange was between two guys drinking beer, and saying is oh, have you done cost segregation? No, dude. Yeah, you're an idiot. You have to do cost segregation. Now it's much worse, because now we have AI. So what people believe is, okay, let's just ask our favorite AI agent like ChatGPT, whatever you prefer. So they type, and what happens right now, again, that's early 2025. Now AI is in its infancy right now. All it can do is like a kid, what infants do. They repeat what they hear from adults, right? That's what happens with AI. AI looks online, whatever information they find it aggregates that, edits that, and spits out. But that information that it feeds on is garbage. Right. So you get garbage information, and it spits it into garbage reply. Even some of my colleagues started using AI to answer clients' questions, or online questions. You can tell, if you look, I'm #1 contributor to tax forum on Bigger Pockets. Everybody knows Bigger Pockets. There is a tax forum where we talk about taxes, and I'm for a number of years have been #1 contributor there. Some of the people there answer, and if you look at the answer, you can see if every phrase has 2 words that are in bold, okay, then the guy didn't type it. That's AI. And when you read them, that sounds no, that's BS. That's not real answer. That's not how it works. So be careful, when you get information which is produced by AI, because it gives an impression, oh, computer did research. Computer doesn't do research yet. Maybe a couple years from now, AI will be smart enough to actually evaluate validity of information and get real tax advice. So for writing your resume, it's great, but for answering your tax question, it's not.
Be careful.
Right? So, now strategies, what you asked me about, Mike. So, okay, you brought up great example, cost segregation. Let's talk about that. So much talk about cost segregation starts with this. Let me give you an example how much money it saves you. Okay, I can play that game just as well as anybody else. I'll play it right now. Absolutely. Let's do that. Okay, so you're buying a property. The property costs $400K. So you buy a $400K property. How much cost segregation normally identifies that? By the way, I don't want to waste our time right now. If you guys are listening right now and don't know what cost segregation is, please Google it. There's so much material. Mike had one of the guests explaining, that in one of the prior episodes. There is a lot of information. I'm not explaining the concept. I want to just give an example.
Right.
So it says 25% is pretty standard thing that cost segregation identifies. So 25% of 400 is what? For your calculator, that's 100, right? So suddenly we have 100 which can be depreciated right away. Okay, so we get 100,000 write-off. Wonderful. What is our maximum tax rate? We'll look up. People saying, okay, somewhere like close to 40%, let's say 35. Okay, 35% of 100,000. What is that? 35,000. I just saved myself $35,000. Hooray! Isn't cost segregation great? Yeah, I mean, that's the typical conversation, and that's like two investors can talk to each other. And question is like immediately question asks, so Michael, I'm talking to myself right now, saying like, so are you saying that's not how it works? No, I'm not saying that's not how it works. I'm saying is it's not always how it works. It can work this way, but sometimes it does not. So let's talk about that. Because when people talk about cost segregation, they're missing the framework. And example would be, is again, two guys talking and I'm saying is, do you see how much gas costs? I don't have to pay anything. I drive Cybertruck. I just plug it. There is electricity. So the guy goes with his Ford 250 and saying is, where do I plug it? Dude, you cannot plug it. It's not electrical.
Right.
You have to put gas in order to take benefit of plug-in electricity instead of gas. You understand that, right? You have to have an electric car. Well, cost segregation is similar. If you want to use cost segregation, you need to have a vehicle that you can plug into cost segregation, and not everybody has it. So what is that? Perfect example when it works. When it works would be this. You are a full-time investor. Okay. Am I right at the previous episode, one of the early ones, you had Jason McDougall?
Jason McDougall, yeah, he was recently, yeah.
Okay, example. You're Jason McDougall, full-time investor, right? Like, all you're doing is like bunch of investments. Okay. You're Mike Hambright, doing like full-time investing. Is okay. What is great about you? Because all you do is real estate. Okay. You guys don't have W-2 income. You don't work for a guy. Okay, so what you do all day long, you are making deals. You are doing this, you are doing that. And you also hold portfolio of properties, right?
Right.
So what is great about it? Because if you go and do cost segregation for your rental portfolios, then what you can do right now is you take the loss in my example, right, was 100,000 write-off, and you apply it against your other income. What other income? Like something that you generate from flips, from wholesaling, from, in your case, mentoring people, for like any other income, because it's not W-2 income. Now let's change an example, bring somebody else and saying is, instead of you guys being full-time investors, right? We're talking somebody who is a physician by day. Okay, so they're making $500,000 a year working for an emergency room. Okay, and nobody is more pissed about taxes than physicians, I can tell you, like among my clients, because these guys are making real cool money, but they're also paying absolutely insane amount of taxes. Like they are desperate, and they are, by the way, if any physician is listening to me, understand, because you are so desperate to reduce taxes, you are very easy mark for scams. For somebody who's like, oh, let me show you a way, because like I don't know. Well, let's be careful without that. Right. So let's be careful with those type of suggestions. Like they need to be looked at carefully. So again, you're a physician making your $500,000, like justifiably upset about taxes and looking for a way. And you just read it, oh, okay, I'm going to invest in syndications because syndications do cost segregation. I'm a physician, I don't have time. Perfect. Somebody else runs that for me, does cost segregation, gives me a K1. K1 shows great loss, and that's going to wipe out my taxes. Then they come to an evil CPA, and we tell them, oh, no, sorry, cannot do that. Why? Because the losses from that syndication, that is cost segregation based and all of that, right? But they are called quote unquote passive losses. They cannot offset W-2 income. But they say, but wait a second, why Mike himself just did it? Mike does not have W2. You know, Mike is a full-time investor. He is perfectly positioned to take advantage of that.
Yeah.
The guy who runs your syndication, the sponsor, he's a full-time guy. He's actively running syndication. He is perfectly positioned. But you, who just give him $200K check and receive K1 with a big loss, that loss is not helpful to you right now.
Right.
And people like are completely shocked and saying, but they gave us this presentation. They said losses cause segregation, bonus depreciation, yada, yada. Yes, it all exists, but you cannot take advantage because all you do is W2. You are not full-time investor. Now, is it the end of the road? No. We change example one more time. I'm saying, but I'm married. I'm an investor. I'm a physician. You know, I spend all my days saving people's life. Good for you. You know, I'm super grateful for what you do, guys. And I'm married. Okay. My wife does not have a job. You know, is not a physician. And she is the one who is running our real estate business. Can we benefit from that? Now I'm saying, now we're talking. No, that's a different thing. Right. Because your wife may be able to qualify as quote unquote real estate professional. Many people heard about it, but the way it's presented, like people saying is, oh, you check the box on the form and your loss is unlocked because you say you're a real estate professional. Of course you can check the box. If you can check the box, you know, and we are in the times where you can identify as anybody, right? Hey, I identify as a real estate professional, I check the box. Does not quite work that way, because if you check the box, yes, it will allow you to take all of the losses. But then we have again this guy who tells you, wait a second, there are qualifications. You cannot just be a real estate professional. Now, Mike, you can, because that's what you do all day long. Now, can I? I said I only work with real estate investors. But question is, wait a second, Mike. Am I doing deals like real estate deals? No, I'm doing taxes for people who are doing deals. Oh, that doesn't count. So even though I don't have W2, I run my own company. But no, I'm not a real estate investor. I can. Now, physician who works all day as a physician but has wife who's a full-time real estate investor, that works beautifully. So when you guys are looking for a wife, or you full-time or you like high-income ladies are looking for a husband, choose wisely. You want to find somebody who is unemployed, who you can make into real estate, like full-time real estate investors, then those things work.
Yeah.
You know, so all of that just tells you, are those great strategies, real estate professional, great strategy? Yes, but that's not a strategy. You need to qualify. If you qualify, yes. If all you have is W2 job, sorry, you can't qualify unless you have a spouse who can qualify. So what means is like I urge people, yes, that's great to be educated. You know, you want to be educated? Yes, the way to get educated is this. Buy some books. Okay, I said like I'm a contributor on Bigger Pockets. Bigger Pockets publishes books, some pretty good books. Okay, option 2, maybe even better one. Go to one of the investor fuel conventions. Okay, because Mike brings great speakers, colleagues of mine, who explains it for real. You know, not like some BS that you can find online, like actual people from the field, like speakers who know what they're talking about. So that's how you get educated. If you don't invest in that kind of education, then don't trust like Facebook and Instagram and TikTok, you know, all that education. That's garbage. Okay, then talk to somebody like me. One-on-one, we will tell you that's what you can do in your situations. So, example is, let's go back to that physician who is single. Okay, doesn't have a spouse. So, is everything like closed? Like no way to save anymore? Well, there are ways to save. What's the most common one everybody talks? STR loopholes, like short-term rentals. Loophole, they saying is, well, it's not quite loophole because to me loophole is something with unintended consequences. No, that's intended. That's how Congress wrote that. But yes, physician can possibly do that. So does all it take is buy somebody else's STR in a different state? So okay, Mike and me, like we are both in Texas. So somebody says, okay, our client is in let's say Ohio, and buys a property on the Gulf Coast where we are, okay, makes it a short-term rental. Is that a solution? No, it's not. Still will not work. But didn't I just say that it would work? Yeah, again with conditions. In order for that to work, there is a condition that you need to be, quote unquote, materially participate in that. Okay, if you are several states away and somebody else manages that STR for you, yeah, that can make money, but you will not qualify as material participation in that. So can you work around that? Yes, but that's where it comes to one-on-one planning. Yeah, let's figure out a way. Is it possible? Yes. If you have time, if you do it correctly, yes. So, that game is people want to make it simple, and to me I'm all for it. I like simplicity. Unfortunately, it does not exist when it comes to this guy. Uncle Sam doesn't like things simple, and maybe like Elon can succeed in his officially announced quest to make government more efficient. Okay, I'm reserving my judgment until I see.
Right.
Okay,
we're hopeful.
No, the idea is great. The implementation remains to be seen as far as I'm concerned.
Right.
Okay, but okay. I like simplicity. I like less hassle. So to me, it's like it sounds like I'm self-serving, right? I'm encouraging investors to hire expensive people like myself. You know what? No, if you don't want to, you don't have to.
Yeah.
But just like with everything else, you know how they say, you either hire a professional, or you save money and realize what happens when you hire an amateur. Like in anything, like have you ever done a rehab and saying is, well, real general contractor is expensive. Yeah, they are. They're, and very few good ones, same for accountants, same for doctors, same for anybody. Good ones are difficult to find and are expensive. Cheap ones end up costing you more a lot of times.
No doubt.
Like in anything in life. So I don't have to preach that, everybody knows that. So yeah.
Yeah. So Michael, I feel like we could talk for hours, but we're going to have to, we can't go too much more, but any other kind of words of wisdom as folks are, we started this off by saying, we don't know what's going to happen here. So is it really just a matter of time, just kind of waiting and seeing what's happening, and obviously working with a professional so that they, because guys like you have your finger on the pulse of exactly what's going on or what's possibly going to happen. Right. So just kind of not relying on CNN for tax advice or what's going on, relying on guys like you that are professionals, okay. Right?
Look, like when you say words of wisdom or keeping on the pulse, you could see my facial expression, like I was smiling a bit because, first, wisdom is relative, right?
Yeah.
I consider something wise, and then my adult kids who are half my age may have a different opinion about that. And when I was their age, I had more of their opinion than what I have right now. Yeah, wisdom is subjective, and so is on the pulse. Honestly, I don't keep my fingers on the pulse, so to speak. And when you tell words of wisdom, that would be my words of wisdom. I actually suggest that people don't overthink, trying to anticipate what is happening, because it's extremely difficult, I would even say, in my opinion, impossible, to anticipate that correctly. So if all you do is stressing out, and I'm saying is oh my God, I read this lender who says that our rates are about to finally go down, yes, and I can't wait to refinance finally so the rates go down. But then I listen to that lender and he says it's no, They're not going to go down. They're misinformed.
Right.
In reality, neither lender really knows. They are making informed opinion prediction, but it's not reliable information. And to me, if you are counting on that, you are gambling. And more importantly to me is this: you are wasting your time and energy on trying to dissect the news and extract like actionable tips from that. The way I have always run my business and have done it for 30 years, like people saying is, oh, this is changing, you need to change strategies. To me, I'm keeping the course. I'm making some adjustment. Everybody does, of course. We're all entrepreneurs, we're all business people. We are making adjustment, but never panic type of adjustments. Oh my God, the world is crashing. I need to like urgently drop this completely and start something like totally different. To me, it's like, no, people who tell you this are probably standing to benefit from you making that switch. They are trying to encourage you. To me, is this: you know how to do something well, whatever that is. Okay, like you are a great wholesaler. Keep doing that. Okay, but wholesaling is going to be outlawed across the country. Do we have like examples? Yeah, sure. Dallas is a great example, right? Okay, Houston, where I am, seems to be going that way. So does it mean wholesaling is dead? No, there are plenty of places where you can do that and continue to do that. So how do you adjust? You choose the areas where it works, right? Okay. Oh, rates are going up to crazy level. Oh my God, I cannot hold properties anymore. What do? Okay, then you don't go to the bank. You're trying to find different source of financing. So there are adjustments, but never adjustments that like make you abandon what you became good at, right? Okay, so I'm good at doing taxes and tax strategies. You're good at teaching people how to become investors and gain financial freedom, through being real estate entrepreneurs. Other people are great at buying apartment complexes and turning them around. So whatever. Okay, other people great at STRs like Airbnbs. Okay, whatever it is, to me is tune out the noise, not completely so like you can still hear when it's really important, but don't spend like hours watching every detail. When it's important enough, somebody will put enough memes online where you will learn from memes. Oh, that's what happened.
Yeah.
Now I know.
That's great. Michael, so there's always, guys, I think one of the things that Michael just said is at the end of the day, do what you do and do it well. And, don't worry about, like, you should never go invest in anything real estate wise just because of the tax benefits. Like, it has to be
Absolutely.
the underlying foundation has to be a good deal. And you just rely on the tax stuff for, icing on the cake possibly. But there's also, we're in real estate, so there's asterisks next to everything, right? And so at the end of the day, you just have to work with professionals like Michael that can help you kind of navigate those waters and can diagnose your situation to be able to help you kind of, we have, there's plenty of tax folks out there that once they understand what you're doing, they can advise you on how to navigate those waters. Definitely nothing is one size fits all. So if you're interested in learning more about Michael, tell us your website. Where can they go to learn more?
Okay, I named my firm, very easy to remember, hopefully, REI Tax Firm, Real Estate Investment. So REI, Real Estate Investment, REI Tax Firm. So you type reitaxfirm.com, you will get on my website.
That's great. That's great. I know you put a lot of great content out as well. So thank you for joining us today.
No, thank you for giving me a chance to discuss those things with you. And again, thanks for everything you do for the investor community, and building up all of the people who are creating generational wealth through real estate. So
Yeah,
always happy to collaborate with you.
absolutely. Thanks for sharing with us today. So,
Thank you, guys.
real estate is a great business, and it can be even better if you're working with people that can help you navigate the waters that are a little bit choppy sometimes, and you may not know exactly what you're doing. So, appreciate you guys a bunch. We'll see you on the next show.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.